Good morning, students. Welcome you all once again in the live virtual revisionary classes organized by Board of Studies of ICAI. My name is Alok Garg, and today I will take you through the revision of Ind-AS 116 Leases Standard. So, good morning, Karthik. Good morning, Saminathan. Good morning, Nishmita. Good morning, Korukonda, and good morning, Vatikonda. Yes. So, friends, first of all, I will do a quick revision of the concepts of Ind AS 116 and then I will take you through with some practical questions on it, right? This is a revisionary class and hence we will be completing Ind AS 116 in one class. Otherwise, Ind AS 116 is covered in 5 to 6 classes. Okay? Yes. So, as we know, in our accounting standard, AS 19 is applicable as of today. While in Indian accounting standard, Ind AS 116 is there, which is a converged version of IFRS 16. Globally, IFRS 16 is there, and in Indian context, it is Ind AS 116. Friends, prior to Ind AS 116, the earlier standard was Ind AS 17. But you are not required to do anything with Ind AS 17. Ind AS 17 is not part of your syllabus. In your syllabus, Ind AS 116 is applicable as of today. Right? So what we will be covering today, friends, we will be covering today what is meaning of a lease agreement. What is meant by a lease? Then we will cover key concepts of leases, right? We'll cover the lessee accounting and then lessor accounting and then sublease arrangement and sale and leaseback arrangement. Okay. So first I'll start with the lease definition. What are the four key pillars of the leases, right? We'll talk about that. Then we'll cover the key concepts, then lessee accounting, then lessor accounting and other matters. Other matters means sublease arrangement and sale and leaseback arrangement. Okay. Friends, talking about a lease arrangement, right? What is a lease contract? A lease contract is a contract which cover four aspects. What are the four aspects? Aspect number one, it is a contract between two or more parties, right? For what? For right to control the use. For right to control the use of identified asset. Right to control the use of identified asset for a period of time in exchange for a consideration. For a period of time in exchange for a consideration means it is talking about transferring a right to control the use, right, not right to use, right to control the use means in our accounting standard the word was right to use. In Indian accounting standard 116 the word is right to control the use means who should control the use? Lessee should control the use, right? So lease is a contract where there is a transfer of right to control the use of identified asset, right? For a period of time in exchange for a consideration. For a period of time means lease term, LT, lease term, lease period, right? Consideration means lease payments, right? So we'll be talking about these four concepts. One, we'll understand what is the meaning of identified asset. We'll understand what is the meaning of right to control the use. We'll understand the meaning of lease term, lease period, and then we'll understand the meaning of lease payments. This is the heart of the standard. This is the heart of a lease arrangement. Okay. Now, what is the identified asset? Identified asset is an asset, right? When, so an asset will be called as an identified asset under lease arrangement when two conditions will be satisfied. When two conditions will be satisfied. What are those two conditions? What are those two conditions? Two conditions are number one, the asset has to be explicitly or implicitly written in the contract. The asset should be explicitly or implicitly written in the contract. It has to be mentioned in the contract. Asset should be mentioned in the contract. Number two, the lessor should not have a substantive right to substitute the asset. Number one is very much clear. The asset has to be explicitly or implicitly mentioned in the contract. Number two, the lessor should not have a substantive right to substitute the asset. What is meant by substantive right to substitute the asset? Means lessor should not have a substantive right to replace the asset. Number one, lessor should not have a right to replace the asset. If the asset has a right, if the lessor has a right to replace the asset, the lessor is not getting any benefit out of it. Are you getting me? For example, there is a contract between the lessor and lessee. Okay. And this lease contract is for a vehicle, right? It's a vehicle lease. So what lessor is doing, so in the contract, lessor says that lessor will replace the car only when the car will get damaged or when the car will require a service or maintenance. So tell me, if car is required a service or a maintenance, or car has met with an accident and now lessor is replacing a car, is there any benefit of lessor out of it? Whether lessor is earning anything? Answer is no. This is a protective right. This is more of a protective right. This is more of a protective right, right? Lessor is not getting any advantage out of it. Okay. So in this case, we cannot say that lessor has a substantive right to substitute the asset, right? Substantive right to substitute the asset means by replacing the asset, lessor is having some economic benefit. Okay. Friends, these are the two key conditions for considering an asset as an identified asset. For considering an asset as an identified asset. Okay. And let me now take you to my Excel file so that, quickly and in a summarized manner, I will explain you each and everything. Okay. So this we understood identified asset, and let's take a quick example of identified asset. For example, airport authority, airport. You all have visited airport. Now what happened when you entered into the airport premises? You must have seen the boarding counter of the airlines, right? Where you are submitting your luggage, where you are getting the boarding pass, right? So these airline companies have the leases. These airline company has taken the space on leases from the airport authority. Now what happened? For example, when you visited Delhi airport and when you entered from gate number 4 or gate number 5, so you have seen there is a boarding counter of an airline company, right? But after 6 months, when you visit there, you found there is the boarding counter of that airline is not there in front of gate number 5 or gate number 4, but now it is shifted to in front of gate number 2. And you found that in front of gate number 4 and 5, there is a counter of Starbucks and Hamleys, etc., etc. So friends, if I talk about these airport spaces contracts, what happens if the airline comes and asks, let's say I need a 1000 square feet of office space. Airport authority says that, okay, I'll provide you 1000 square feet of office space and I am providing you in front of gate number 5. So what is that? It is explicitly mentioned in the contract, 1000 square feet of space and in front of gate number 5. But airport authority says that I will replace this space, right? If somebody else will come, I will replace this space. For example, Reliance has come and Reliance told there is a heavy footfall in front of gate number 5. Okay. I need a space for my Hamleys store in front of gate number 5. So friends, the airport authority has shifted this airline from gate number 5 and given the space to Reliance for the Hamley store. Now friends, tell me, by doing this, whether the lessor is getting a benefit or not. Because the lessor will get the premium, airport authority will get the premium, correct? They will get the premium. Yes, by doing this, the lessor is getting a premium. It means the lessor has a substantive right to substitute the asset. The lessor has a substantive right to substitute the asset. So whether it will qualify under a lease contract, it is not meeting a definition of identified asset. You are right, Saminathan. But what about others? The example which I have taken for this office space, is it meeting a definition of identified asset? Answer is no. Why? Because lessor has a substantive right to replace the asset. And if it is not an identified asset, friends, then whether it will cover under Ind AS 116? Answer is no. So it is not covered under Ind AS 116, but doesn't matter. The airline company has a space in front of gate number 2 or gate number 4 or gate number 5. The airline will get 1000 square feet of space and airline will pay a rental. So what the accounting will be there? What will be the accounting? I got the answer from 3 students as of now. What is the accounting? Yes, Saminathan, you are absolutely right. Ayush, you are absolutely right. Rental expense account debit to bank account, not the ROU, right? AS accounting, you are absolutely right, Karthik. Yes, Korkonda, you are right. So it is rent expense account debit to landlord account means a landlord account debit to bank, or not still rental expense account debit to bank account. Okay. So this was the concept of identified asset. Then right to control the use of asset, right to control the use of asset, right to control the use of right to control the use of identified asset. What is meant by right to control the use? I always used to take an example like I am having a Skoda car and Saminathan has requested my car for 7 days, right? He told, sir, you are going out of station, can I use your car? I said yes, but I have told Saminathan that you need to get the fuel only from a specified petrol pump. Okay. So Saminathan told, sir, but if I have to get the fuel from this particular petrol pump, then I have to travel to almost 30-40 kilometers. I said, nothing doing, you have to. Then I told him, you should not take this car beyond 9 p.m. in the night. Only you will drive the car, no any driver, no any family member, right? So I am giving lot of instruction to Saminathan that how he will use the car. Now, my question to all of you is, I am providing the keys to the car and Saminathan will use the car, but I am giving lot of instruction that how and for what purpose the car is going to be used. My dear friends, tell me, in this particular case, who is controlling the use of the car and who is using the car? Who is controlling the use of the car and who is using the car? I am controlling the use of the car. Yes, I am controlling the use of the car. And who is using the car? Saminathan is using the car. Lessee is using the car. Guys, again, I am repeating my question. Who is having a right to use? And for this 7 days, who is having a right to use? and who is having a right to control the use? Lessee is having a right to use, but right to control the use is lying with the lessor, which is myself, right? But of course, Saminathan is using the car. He has the keys. I only told him how to use this car, for what purpose this car has to be used. So I am controlling the use of the car, but he is using the car. This is the difference between right to use and right to control the use. Okay, right? So friends, in right to control the use, two conditions are there. Condition number one, benefits from use of the asset should always lie with the lessee. Benefits from use of the asset should always lie with the lessee. Benefits from use of the asset means we have done a question of a solar power plant. You remember that question of solar power plant where the entire production, is taken by one party, right? Entire production means dedicatedly. It means it seems like this party has taken this solar power plant on lease and he is getting the entire electricity. Okay. So then we have discussed in that question, and if quickly I need to show you that question, right? Uh, yes, this solar farm, right? Company MNO enters into a 15-year contract with power company PQR to purchase all of the electricity produced by a new solar farm. PQR owns the solar farm. So who is the owner of the solar farm? PQR, and will receive tax credit relating to construction and ownership of the solar farm. And MNO, the lessee, will receive renewable energy credit that accrue from use of the solar farm. Who has the right to substantial benefit from the solar farm? Right. So friends, standard says that for establishing the right to control the use of identified asset, the benefit from use of the asset should lie with the lessee. In this case, my dear friends, who is getting the benefits from use of the asset? When I say benefits from use of the asset means the production, the primary product. Benefits means, what is meant by benefit? Benefit means primary output, byproduct, any other benefit from use of the asset should lie with the lessee. In this case, lessee is using the output of the solar farm. Lessee is using the output of the solar farm, which is what? Which is electricity. And who is getting the energy credit from use of the asset? This renewable energy credit, lessee is getting this renewable energy credit from use of the asset. What lessor is getting? Lessor is not getting the benefits from use. Lessor is getting the benefit, this tax credit relating to construction and ownership. Lessor is only getting the benefits from having the ownership of the asset, not from the use of the asset. The production is used by the lessee means the output is used by the lessee, right? Then what? The energy credit from use of the electricity also belongs to the lessee, not the lessor. So in this case, we can say that benefits from the use of the asset is lying with the lessee, right? Is that clear? Yes. So second, decision about the use of the asset. Decision about the use of the asset should be lying with the lessee. When I say decision about the use of the asset means how to use and for what purpose the asset is used should be lying with the lessee. How to use and for what purpose the asset is going to be used should lie with the lessee, right? So friends, if these two conditions will be satisfied, we can say that right to control the use is transferred to the lessee, right? Then, so we covered these two aspects. Right to control the use we covered, identified asset we covered. Now we are covering a specified period of time. Yes, the third one, which is known as a lease term. Tell me, what are the four key ingredient of lease term? Tell me. What is meant by lease term? What is meant by lease term? Lease term is a non-cancelable period. Lease term is a non-cancelable period. Plus rent-free period. Plus optional renewal period. If lessee is reasonably certain that lessee is going to renew the optional renewal period. Right? Plus optional termination period. If lessee is reasonably certain that lessee is not going to avail the termination option. Is that clear? Is that clear to all of you? Yes? Yeah. So friends, let's say, let's quickly discuss this example. MBN Small Limited entered into a contract with Haldiram Limited to provide a space for outlet on a lease basis for 10 years. Total contract is for 10 years. The initial 6 month will be a rent-free period, and further 5.5 years will be a non-cancelable period, and if any party defaults, they have to bear the rental cost up to this period. Okay, they have to bear the rental cost up to this period. So in this case, if you look at the total contract is for 10 years. The first 6 months is a rent-free period. Why these companies, why these malls are providing a rent-free period to the outlets? Why they are providing the rent-free period? What is the reason? Can anyone tell me? The reason is to attract the lessees. Number one, the reason is to attract the customers, lessee. When I say customer, I mean to say lessee. Right. Number two, since these malls are giving the spaces to the businesses, right? For example, I want to open a restaurant in a mall. Of course, the initial 5 to 6 months is a setup time. Okay. And this setup takes a time. And of course, during the setup, I will not earn any revenue. That is why these malls provide a rent-free period to the lessees, to these companies who are creating their store, who are opening their store, so that for a non-revenue generating period, they don't have any obligation to pay the lease rental, right? So that is why they are they are providing a rent-free period. Okay. So in this case, 6 month is a rent-free period and 5.5 year is a non-cancelable period, right? 5.5 year is a non-cancelable period. Okay. So in this case, the total lease term is 10 years. Sorry, 6 years. Okay. So what is my lease term? My lease term is a non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain that lessee is going to avail the optional renewal period. Okay. Lessee is going to avail the renewal option. Okay. And optional termination period is also going to be covered if lessee is reasonably certain that lessee is not going to avail the termination option. Right. For example, let's take an example of optional termination period, renewal period. MBN Small Limited entered into a contract with Haldiram for 6 years, right, to provide a space for outlet on a lease basis for 6 years. Initial 6 month will be a rent-free period. Further 5.5 year will be a non-cancelable period. And if any party default, they have to bear the rental cost up to this period. The lessor has also provided a lease renewal option for 2 years. And what information is further provided? And agreed that in this 2 years, the rental cost will be 20% less than market rentals. Friends, if lessee is going to renew this lease for 2 years, right, the rental cost for that 2 year period will be 20% less than the market rentals. Tell me, there is a reasonable certainty that lessee is going to avail this renewal option or not? The reasonable certainty is there or not? Because whatever market rental will be there at that point of time, the lessee has to pay 20% less. Right, Saminathan? It means there is a reasonable certainty that lessee is going to avail the renewal option. Right. So in this case, what is my lease term? Non-cancelable period 5.5 year, rent-free period 0.5 year, optional renewal period 2 years, and total lease term is 8 years. Right. This is what we need to finalize, we need to conclude. And at the same time, let's take an example of termination period also. MBN Small Limited entered into a contract with Haldiram to provide a space for 10 years. Initial 6 months will be a rent-free period. Further 5.5 year will be a non-cancelable period. If any party default, they have to pay the rental up to this period. So what is my RFP? 6 months. What is my NCP? 5.5 years. Then they have written, in the last 4 years, the lessee has the option to terminate the lease by giving only a 1 month notice. However, the lessee has incurred a huge leasehold improvement in this premises. While lessee has an option, the total contract is 10 year. 6 year is rent free and non-cancelable period. In the last 4 year, the lessee can terminate the lease in the last 4 year. But tell me whether whether there is a reasonable certainty that lessee is not going to avail the termination option? Yes or no? You are absolutely right, Saminathan and Karthik. Yes, there is a reasonable certainty lessee is not going to avail the termination option. Why? Because lessee has done a huge leasehold improvement in this premises. And if lessee will terminate and will move to another space, lessee has to incur, it is a sunk cost. Lessee has to again incur the leasehold improvement cost, right? So that is why there is a reasonable certainty that lessee is not going to avail the termination option. So in this case, what is my lease term? NCP is 5.5 year, RFP 0.5 year, and optional termination period 4 years, right? And when you need to consider this, only when the lessee is reasonably certain to not to avail the termination option, right? So my lease term is total 10 years. Is that clear, my dear friends? Is that clear to all of you? Yes. I hope this identified asset, I hope this right to control the use of the asset and this lease term is clear to all of you. Is it clear in mind or clear from mind? While it is a revision, but I am also covering the examples, okay? So that all of you will be able to have a quick revision, right? Right now in the class itself. Now let's come to the lease payments. My dear friends, the fourth aspect is lease payment. Okay. So what is meant by lease payment from the lessee perspective and from the lessor perspective? First of all, we'll understand the lessee perspective and then we will add just one kind of a lease payment. It will also become a lessor perspective. Okay. My lease payment is fixed lease payment. Fixed lease payment. Okay. Fixed lease payment. Friends, for example, you all know how the lease contract works. Like monthly lease rental is 10,000 rupees. So that is a fixed lease payment. Okay. The second one is in substance fixed lease payment. What is meant by in substance fixed lease payment? What is meant by in substance fixed lease payment? In substance fixed lease payment means, for example, escalation. So sitting on today, I know that my current year rental is 1 lakh rupee, and next year it is going to be, next year the increment has to be 10%. So if my rental is 1 lakh rupee, I know fixed rental is 1 lakh rupee. And if 10% increment will be there to in the next year, it will become 1 lakh 10,000 rupees, right? So if it will become 1 lakh 10,000 rupees, this 10,000 is also in substance fixed payment. Means today I know that in the next year the payment will be 1 lakh 10,000. So this 10,000 in substance become fixed. In substance become fixed. Okay. Second example could be, for example, there is a lease contract and there is no fixed payment. There is no fixed payment. But the arrangement is like that only. The arrangement says that the lessee has to pay a rental equivalent to 10 rupee of per quantity produced. Equivalent to 10 rupee per quantity produced. So whatever lessee will produce from that leasehold premises, right? So number of quantity of the production, volume of the production multiply by 10 rupee has to be the lease rental. Okay. And lessor told that the lessee has to pay the rental equivalent to minimum of 50,000 quantity. Friends, while the rental is on the basis of quantity produced, but lessor says that lessee has to pay a minimum rental equivalent to 50,000 quantity. Don't you think in substance 50,000 multiplied by 10, it become fixed? For example, there is only 1,000 quantity produced. Still, lessee has to pay a rental equivalent to 50,000 quantity. And let's say 1 lakh quantity produced. Of course, lessee has to pay a full rental on 1 lakh. 50 तो होगा ही होगा. Yes or no? So in this case, what is my in substance fixed payment? I hope I'm audible to everyone. I'm not getting an answer for this question. Ayush, what is my in substance fixed payment in this case? There is no fixed payment. And lessor told that the lessee has to pay a lease rental for 10 rupees per quantity produced. Okay, whatever quantity will be produced, lessee has to pay a lease rental. But lessor says that the lessee has to pay a minimum rental equivalent to 50,000 quantity. Means my in substance fixed payment is 50,000 multiplied by 10. 5 lakh will become my in substance fixed payment. Then the third one is what? Lease incentive. If lessor is paying any amount to the lessee, that has to be reduced from the lease payments. Variable lease payment depending on the index or a rate means variable lease payment depending on the index or a rate means if a variable lease payment is there which is depending on the quantity of production, percentage of turnover. Okay. So those variable lease payment will not form part of the lease payment. If those lease payment will not form part of the lease payment, those variable lease payment, then where it will go? If it will not become, yes, it will go to profit and loss. Right, Saminathan? It will go to P&L. You are absolutely right, Karthik and Lavanya. It will go to the expense P&L. So which variable lease payment will be covered, which is depending on the index or a rate. When I say rate, means consumer price index, wholesale price index, LIBOR, MIBOR, RBI reference rate, right? So if it is depending on an index or a rate, only those lease payment has to be considered. Then fourth, exercise price in case of a purchase option, right? So for example, the lessor says the lessee, after 10 year, I am giving you a purchase option. 10 year is a lease term. But once your 10 year will be finished, there is a purchase option available to you. There is a purchase option available to you, right? Purchase option available to you. And if lessee is reasonably certain that the lessee is going to avail the purchase option, that exercise price of the purchase option will also become part of lease payment. Termination penalties, as we understand that if lessee is reasonably certain that lessee is going to terminate the lease contract and there is a termination option, and why lessee is going to terminate the lease contract, what could be the scenario? Let me tell you. Let's say Karthik wants to open a coaching class for CA final students, right? So just Karthik want to experience it. So Karthik decided to open a coaching center only for 1 year. He is very much clear because he has got an offer from US based company. He want to go to US, but what happened? So the visa and the other formalities, etc., etc. He know that it will take 1 year. Okay, and almost the offer is finalized, and they told that the joining date they have given is for after 1 year, right? They have given the joining date after 1 year because they told Karthik, you sort out all the issues, right? And then you can join us. Okay. The contract is signed. He will join this company after 1 year. In the meantime, he decided to educate CA final students. Now, he is searching for a space so that he can run his coaching center. So when he went to the lessors, so everybody told him, we will provide you the space for a minimum period of 18 months. For a minimum period of 18 months. Okay. So if you leave this space before 18 months, you have to pay a termination penalty of 50,000 rupees. You have to pay a termination penalty of 50,000 rupees. Okay. So friends, tell me, and Karthik knows that when I'll go to US, nobody will be there to take care of this coaching center. So before moving to US, he has to hand over the keys to the lessor. Doesn't matter. The termination penalty will be there, not there. He has to hand over the keys to the lessor. Right. Friends, in this case, this termination penalty is reasonably certain or not on the day one. Ayush know that. Sorry, Karthik knows that. Karthik has to pay a termination penalty. So when initially Karthik is computing a lease payment under Ind AS 116, this termination penalty is also going to be considered. Okay. Residual value guarantee by the lessee. Sometimes the lessee provide a residual value guarantee to the lessor. Right? The lessor says that I need a guarantee. Why? Why lessor need a guarantee? Tell me. Why lessor need a guarantee? Lessor is asking for a guarantee. For example, I have taken this mobile on a lease basis from the lessor. The life of the mobile is 3 to 4 years, okay, maximum. The lessor told that if I will use this mobile, of course, this is my asset, I am the owner of this asset, I will use this mobile beautifully. And I will get, after 3 years, let's say, or 4 years, I'll get a good amount of residual value. I don't know how you will use this asset. If you will not use this asset properly, my residual value will be significantly deteriorated at the end of third or fourth year. So I, as a lessee, told lessor not to worry, Mr. Lessor. You tell me what guarantee you are expecting, what amount you are expecting after 3 years, and after 3 years, let's say. So lessor told that I am expecting 10,000 rupees. This mobile is having a cost of, let's say, 50,000 rupees, and I am expecting 10,000 rupees of residual value after 3 years. 10,000 rupees after 3 years. Okay. So lessee told okay. Lessee told okay. I am giving you a guarantee. For example, I will use this mobile phone, and by my usage of this mobile phone, I am giving you a guarantee of 10,000 rupees. So whatever shortfall will be there, I will compensate that shortfall. Means after 3 years of my usage, let's say you will take this mobile phone into the market, and let's say you will get only 4,000 rupees. Then I will compensate you 6,000 rupees because you want a guarantee of 10,000 rupees, right? Second, let's say if you are getting 8,000 rupees in the market, I will compensate you fit with 2,000 rupees. Okay. So friends, if on the day one, lessee expects that the lessor is not going to avail, the lessor is not going to get so much of amount, then whatever is beyond that, that will be your residual value guarantee by the lessee. Friends, these are the examples of the lease payment. These are the lease payment which one has to consider for computing the right of use asset and lease liability. Friends, the same lease payment is considered by the lessor also, plus there is one additional lease payment in case of lessor. And what is that? That is residual value guarantee by the party related or unrelated to lessee also, right? Since it is a lessee related lease payment, and hence only residual value guarantee given by the lessee is considered. But in case of lessor, all the residual value guarantee has to be considered, be it a lessee or any third party. Okay, that's the only difference. That's the only difference. Now, quickly, let's do a question on this. Lease contract is for 5 years. Lease payment is 10,000 rupees every year. Escalation clause is 10% every year. Exercise price is 15,000. Residual value guarantee is 10,000. Assuming discount rate of 10%. Friends, year one. In the year one, what is my fixed lease payment? 10,000 rupees every year. Yes or no? Clear hai na? 10,000 rupees my lease payment every year, correct? Now, in the second year, my lease payment will become 11,000. How come it become 11,000 after 10% escalation? In the third year, it will become 12,100. Fourth year, this much. Fifth year, this much, right? So, friends, what is my in substance fixed payment? My in substance fixed payment is my escalation amount every year, correct? Then, lease incentive, no any lease incentive in the question. Variable lease payment depending on index or a rate, no any question, no nothing in question. Exercise price, when exercise price will come into the picture? At the end of the lease term, 15,000 rupees is here. Then your termination penalties, no termination penalty is given in the question. Residual value guarantee given by the lessee is 10,000 rupees. What is my total lease payment? My total lease payment is, what is my total lease payments? My total lease payment is 10,000 in the first year, second year 11,000, 12,100, 13,310, 3961, 641. Now, This is my lease payment. What is my present value factor at the rate of 10%? 1 divided by 1.1. This divided by 1.1. This divided by 1.1. This divided by 1.1. This divided by 1.1. Okay. This is my present value factor. Okay. Now, what is my present value? This multiply by this. This multiply by this. Okay. This multiply by this, right? This is my present value factor. Okay. And what is the accounting entry? Right of use asset account debit to lease liability account. Okay, you know that. I need to create, the lessee need to create. There is no rental expense accounting in 116, right? Since it is a revisionary session, I can ask you this question. You all are aware in Ind AS 116, in our accounting standard 19, there was a concept of operating lease and finance lease. But in Ind AS 116, there is no concept of operating lease or finance lease from the lessee perspective. It is only a lease from the lessee perspective, right? It is only a lease from the lessee perspective. And my dear friends, the lessee has to recognize a right of use asset and lessee has to credit a lease liability. Okay. Is that clear? I hope it is clear to everyone. Friends, just give me a minute. Just give me a minute. Okay. So in Ind AS 116, it is only a lease from a lessee perspective and doesn't matter if it is a finance lease or operating lease. Lessee has to create, lessee has to recognize a right of use asset and credit a lease liability. Friends, we covered all these four important concepts of lease contract, which is identified asset, right to control the use of an asset, lease term, and the lease payments. I hope you guys have understood it very well. Any doubt, any question, any problem? Yes? No any question, no any problem? Very good. Very good. Discount rate, my dear friends, tell me. There are two type of discount rate. Internal rate of return IRR, lessor IRR, and the lessee's IBR, incremental borrowing rate of lessee, and the internal rate of return of lessor. If these two rates are given in the question, which rate you will use for the purpose of discounting of lease payments, for the purpose of computing the present value factor? I got the answer only from 3 students as of now. Karthik has given the answer. Ayush, Saminathan, Lavanya. Offline, Rajesh has also given the answer. Yes, you all have given a right answer. The first choice is internal rate of return of lessor. If in your examination question, if both the rate is given, lessee IBR is given and the lessor IRR is given, the first choice is lessor IRR. Okay. So discount rate is a interest rate implicit in the release, which equalizes the below equation. Which equation? Present value of the lease payment to the lessor plus present value of the unguaranteed residual value should be equal to the fair value of lease asset plus initial direct cost. In case interest rate implicit in the lease is not available to the lessee, then lessee needs to identify the incremental borrowing rate to the lessee. Okay. So the first choice is lessor IRR. The second choice is lessees IBR. Okay. What is my initial direct cost? My initial direct cost are those costs which are the incremental cost which would have been incurred in connection with entering into the lease contract only, like legal fees, stamp duty, court fees, etc. Means by entering into a lease contract, you are incurring a cost. You guys understand the meaning of directly attributable cost? You guys understand the meaning of directly attributable cost, incremental cost? It is used, this term is used in many standard. The directly attributable cost, incremental cost, this means had the asset, had the asset not been acquired, the cost would not have been incurred. The cost would not have been incurred, right? Means had this lease contract, had this lease contract does not have been entered, this cost would not have been incurred. So this is an incremental cost. My dear friends, let's say you want to uh, you are exploring or you are searching for an office space. You went to a real estate broker and real estate broker said that I will show you the space, but for every space which I'll show you, I will charge a fee of 1000 rupees. Okay. So every space which I will show you, I will charge a fee of 1000 rupees. Doesn't matter whether you will choose that space or not choose that space, whether it will fit for your expectation or not, I will charge 1000 rupees. Friends, is it an incremental cost? Answer is no. This cost is getting incurred before entering into a lease contract. Means this cost is incurred. This is a sunk cost. This cost is incurred. Even though you are not liking the place, still you are paying 1000 rupees. Yeah, right. This is a cost for exploration. Okay. But let's say, and the real estate broker told that 1000 is my fee for every space I'll show you. And once you finalize the space, right, then I will charge a commission of 1% of the 1 year rental. So once a space is finalized, a contract is finalized, the real estate broker will charge 1% commission. Whether this 1% commission is an incremental cost? Answer is yes. Why? Why the lessee is paying? Because the lessee has entered into a lease contract. Lessee has finalized the space. That is why he's paying. So legal fees, stamp duty, court fee, brokerage, these are the example of initial direct cost, right? Is that clear? Is that clear? Now, talking about the initial recognition and measurement. Quickly, we'll cover this and then we will solve a question on the Forex leases. Okay. A Limited has paid an advance rent of rupees 10,000 as on 15th February 2024. The asset is given on a lease the asset is given on a lease on 1st April 2024. So this A Limited has paid an advance rent of rupees 10,000. Okay. The annual rental is 1 lakh for 3 years. Interest rate implicit in the lease is 10%. The rental payment is at the beginning of the year. Compute right of use asset on the commencement date. Friends, what is my right of use asset? My right of use is equal to, my right of use is aggregate of what? Aggregate of what? My right of use is aggregate of 4 aspects. My right of use includes the following. Number 1, present value of future lease payment. My present value of future lease payments. Okay. Means once lessee has entered into a contract and lessee, tell me when lessee will recognize the right of use asset? There are two dates, inception date and commencement date. Inception date is a date when the lease terms and conditions are finalized, when the contract is finalized. Commencement date is a date when the asset is available to the lessee for the usage. So when lessee will recognize the right of use asset, whether inception date or commencement date. I got the answer from Saminathan, Lavanya, Karthik, Asthana, Rajesh, Ayush, and you all have given the right answer. Lessee will recognize the right of use asset on the commencement date, right? On the commencement date. So let's say if the lessee has paid any amount before commencement date, because if the agreement has been signed 1 month back and the asset is available today, there might be possibility that the lessee has already paid the rental 1 month back, right? Some security type of some advance rental, right? So he has already paid, okay? And after commencement date, of course, after commencement date, lessee will pay some more amount. More amount means future rentals, okay? So what is my right of use asset? Standard says that right of use asset consists of present value of future lease payment, any lease payment made on or before commencement date, any lease payment made on or before commencement date, okay? Any lease payment made on or before commencement date, okay? Any lease incentive received by the lessee. Friends, if the lessor is paying some incentive and lessee is receiving some incentive, it has to be reduced. Then initial direct cost incurred by the lessee, right? So if lessee is incurring any initial direct cost, that has to be added to the right of use asset. And provision for asset retirement obligation. For example, at the end of the lease term, if lessee is obligated to restore the site, dismantle any asset or equipment out of that leasehold premises, that is required to be added to the right of use asset, okay? So provision for asset retirement obligation is also required to be added to the right of use asset, okay? Is that clear, my dear friends? Is that clear? So now I have a question. For example, A Limited. A Limited entered into a contract with B Limited. A Limited is a lessor, B Limited is a lessee. B Limited is a lessee. A Limited is a lessor. This contract is a lease contract for 5 years. The annual rental is 1 lakh rupee. So what is the total rental in 5 years? If annual rental is 1 lakh rupee, 5 lakh. The lessor, the lessee has paid the entire 5-year rental in advance on the commencement date to the lessor. Lessee has paid 5 lakh rupee of advance rental to the lessor in advance on the commencement date itself. Tell me, what is my right of use asset? What is my lease liability? Tell me what accounting entry has to be passed on the day one. What accounting entry has to be passed on the day one? Ayush, 5 lakh to bank. But Ayush, what is debited? To bank is okay. So guys, on the commencement date, bank will be credited. I agree with you. I agree with all of you. But what is debited? Yes, ROU has to be debited. Right of use asset account debit to bank, not to lease liability. Or if you will credit lease liability, immediately you will debit lease liability and credit bank. So where it will get fitted here? Right of use asset is equal to present value of future lease payment, which is a lease liability. It is zero. Why? Because in future nothing has to be payable. फ्यूचर में तो कुछ पे करना नहीं ना, नथिंग इज पेबल इन फ्यूचर, नो लाइबिलिटी. Okay, because everything is paid in advance. Then any payment made on or before the commencement date, where 5 lakh will come, 5 lakh will come here, right? So my ROU is equal to 5 lakh. So this ROU is going to be depreciated over the period of 5 years. ROU is going to be depreciated over the period of 5 years, right? Friends, let's discuss this question. A Limited paid an advance rent of 10,000. Asset is given on 1st April. Annual rental 1 lakh for 3 years. Interest rate is 10%. Rental payment beginning of the year. Compute ROU on the commencement date. On 15th February, what entry was passed by lessee? Lessor account debit to bank account. Advance rent to bank. Okay. Then I need to compute my right of use asset. Year 1, 2, 3. Amount 90,000, 1 lakh, 1 lakh. Why it is 90,000? Because 10,000 has been paid in advance. Right. And what is my present value factor? Discount rate is 1%. What is my present value factor? The payment is at the beginning of the commencement date. The payment is at the beginning and hence the payment is at the beginning and hence the, just a minute. Since payment is at the beginning, hence the present value factor is 1. In the next year, it is 1 divided by 1.1. In the next year, it is 1 divided by 1.1. Right? This is the present value factor. Okay. So what is my present value of future lease rental? 263,554. 263,554. Is that clear? So what is my accounting entry? My accounting entry will be my payment made on or before commencement date is 10,000. Lease liability is 263. So total is 273, right? 273. Is that clear? So what entry I need to pass? What entry I need to pass? Initially, I passed an entry lessor to bank, right? Now I will credit lessor because I got the space. I will credit lessor, okay? And I will debit my right of use asset. Is that clear? Is that clear? Whether this entry, this accounting is clear or not clear? Please tell me. Friends, now let's discuss a question from a question bank, and please confirm if it is visible to all of you. Please confirm if it is visible. Yes. Very good question. Question number 5. I hope this question number 5 is visible to all of you. Is it visible? Not visible? Just a minute. Yes. Is it visible? Question number 5. Is it visible now, Saminathan? Yes. Entity X is an Indian entity whose functional currency is INR. So this question is a mix of Ind AS 21 and Ind AS 116. Okay. It has taken a plant on lease from entity Y for 5 years to use in its manufacturing process, for which it has to pay annual rentals in arrears of USD 10,000 every year. So The lease period is 5 years. And the rental payment is in US dollar, foreign currency. Functional currency is INR, foreign currency is US dollar. So $10,000 every year. 5 year is the lease period. On the commencement date, exchange rate was given. Exchange rate was 68 rupee per US dollar. Exchange rate was given 68 rupee per US dollar. And the payment is in arrears, means payment is happening at the end of the year. Okay. The average rate for the year 1 was 69 and at the end of year 1 was 70. So the exchange rate was 68 in the beginning, means commencement date. It was average. The average rate for the year was 69 and the closing rate was 70. The incremental borrowing rate, IBR, of entity X of the lessee on commencement of the lease for a USD borrowing was 5% per annum. And the incremental borrowing rate is given. What is the use of this incremental borrowing rate of 5%? What is the use of this incremental borrowing rate of 5%? Discount rate. It is a discount rate. We need to apply this rate for discounting our lease payments, right? How will entity X measure the right of use asset and lease liability initially and at the end of year 1? How will entity X measure the right of use asset and lease liability initially and at the end of year 1? Right? So this is the question. And what could be the answer of this question? How will compute this? Okay. So let me take you. Let's solve this question. Question number 5. Okay. Yes. What is the data and details given? What the data and details given in this question? I hope my Excel is visible to all of you. Is it visible now? My Excel is visible to all of you guys. Okay. Yes. So quickly, how many years are there? Year. 1, 2, 3, 4, 5. Amount in USD, right? We'll compute this ROU lease liability in US dollar first, right? What is my amount in USD, friends? 10,000 rupees every year. $10,000, sorry, not rupee, $10,000 every year. Okay. Then present value factor at the rate of 5%. Present value factor at the rate of 5%. What is my present value factor at the rate of 5%? What is in the first year? 1 divided by 1.05. Then this divided by 1.05. Right? So on and so forth. So this is my present value factor. Right? Then my present value, and what is my present value? This multiply by this. Okay. This is my present value. Okay. Here is the total. 43295 is my present value of the future lease payment in dollar. But my functional currency is INR. What should I do now? My functional currency is INR. What should I do now? What is my exchange rate on the commencement date? I need to convert it, right? I need to convert it exchange rate on the commencement date. 68. This is my present value of lease liability because this is a future payment in USD. Now, my present value of lease liability in INR. What is my present value of lease liability in INR? It is 29,44,044, right? So now let me create a lease liability schedule also in US dollar. Okay. Lease liability schedule in US dollar. Liability schedule. Lease liability. What was the ask of the question? The ask of the question is how ROU and lease liability has to be recognized on the day one, means commencement date, and at the end of year one, right? That was the question, correct? So now year, then opening balance, then your year opening balance, interest cost at the rate of 5%, interest cost at the rate of 5%, then your payment and closing balance. I hope you all are okay with this lease liability schedule. This is a revisionary classes, and hence I'm not going by step to explain you this, right? Opening, what is my opening balance of lease liability? My in US dollar, 43295. What is my interest cost? Since the payment is in arrears, so interest cost is 5% of this. What is my payment? My payment is $10,000. What is my closing balance? My closing balance is this plus this plus this. Okay. So my closing balance of liability, at the beginning of the year was 43,295, and the closing liability at the end of the first year was 35,460. If I will just drag this schedule, at the end of the 5 year, this liability has become zero. Now, what is the accounting? So on the day one, on the commencement date, what is the accounting on the commencement date? Accounting entry on the commencement date. Accounting entry on the commencement date. Accounting entry on the commencement date is what? ROU asset account debit to lease liability credit. To okay. Then what is the accounting entry? You need to depreciate. So this is the accounting entry on the commencement date, then on the reporting date. Reporting date. What you will do, you will depreciate ROU, right? क्या करेंगे? You will depreciate ROU on the reporting date. Depreciation. Charging depreciation on ROU. Charging depreciation on ROU. What depreciation will be charged on ROU? Depreciation account debit to accumulated depreciation. This divide by 5. This divide by 5. Debt to egg debt. Okay. Second, so you have provided depreciation. Now you have to unwind this discount, means you have to charge interest. Okay, you have to charge interest on the lease liability. You have to charge interest on the lease liability, right? What accounting entry you will pass for the interest? Entry for interest cost. Entry for, sorry, charging interest on lease liability. Charging interest on lease liability. What is the accounting entry for charging interest on lease liability? Interest expense account debit to lease liability. To lease liability. Interest expense account debit to lease liability. Interest expense account debit to lease liability. And what is the interest expense? It is already there in your lease payment schedule. It is there in your lease payment schedule. Interest expense is $2165. Multiply by what rate? Multiply by what rate? Yes, at the average rate. It has to be at the average rate. Expense to be converted at the average rate. Okay. Multiply by 69. Multiply by 16. Sir, why we have not used this average rate for depreciation? Sir, why? Depreciation is a notional entry. But tell me, this interest you have to pay every year. I mean to say, lease payments you have to pay every year, right? So this is an unwinding impact. But if I talk about depreciation, your right of use asset is a non-monetary asset. Lease liability is a monetary item. Your right of use is a non-monetary item. Lease liability is a monetary item. Okay. So once you converted your right of use asset, once you created and recognize your right of use asset, there is nothing which is going to be restated. Okay. Nothing is going to be restated. For example, on the day one, our total US dollar liability was 43,295. It got converted and accounting entry was passed. Now this right of use asset will not get impacted by any change in exchange rate. It is just like PP&E. It is a non-monetary item. Non-monetary items are kept at a historical rate. Okay. That is why this 2944,044, what we need to do? We just need to depreciate it on a straight line basis. That's all. But for this lease liability, the forex outflow will happen in the next 5 years. Okay. End of the first year, second year, third year, fourth year, and fifth year. Okay. That is why when we are charging interest, when we are paying, of course, we will pay liability also. What is the third entry? The third entry at the end of the first year, I have to make an entry for lease payment also, right? Then payment of lease liability. At the end of the first year, then payment of lease liability. What is my accounting entry for payment of lease liability, my dear friends? Lease liability account debit to what? To bank. How much lease liability I'll pay at the end of the first year? Of course, I will pay what? How much I will pay? I'll pay 10,000. लीज लाइबिलिटी के शेड्यूल में आ रहा है ना आपका. I will pay $10,000. $10,000, right? At what rate I need to convert this $10,000? Closing rate. Converted at the closing rate. This is 69. This is 70. Okay. This multiply by 70. Right? This multiply by 70. Is that clear or any doubt? Is that clear? Lavanya? Karthik? Karthik has already given the answer. Yes. I hope it is clear to everyone. Right. Now, friends, tell me what is my closing balance? What is my closing balance of ROU and lease liability? My balances at the end of year one. Balances at the end of year one. Right of use asset and lease liability. What is my balance of right of use asset? This minus, right? And what is my balance of lease liability? What is my balance of lease liability? Simple. What is my lease liability in the US dollar? What is my closing liability? My closing liability in US dollar is 35460. 35460. And this lease liability has to be converted at which rate? Converted at closing rate? On the date of balance sheet, on the date of reporting? Yes or no? Yes or no? So now, do we need to pass any accounting entry? Do we need to pass any accounting entry further? So this should be my lease liability. But what is my lease liability in INR? Now calculation of exchange difference. So calculation of exchange difference. Okay. So my closing lease liability should be how much should be my closing lease liability? Simple. $35,460 multiply by 70 rupee, right? And what is my lease liability balance? Lease liability balance. मेरा कितना बैलेंस आ रहा है लीज लाइबिलिटी का आईएनआर में? What is my INR lease liability balance? My lease liability was credited by 2944044. It was interest cost has added my lease liability 149367. Then by paying to bank, it has credited. So my lease liability was credited by this amount. So what is my exchange difference, friends? What is my exchange difference? What is my exchange difference? Exchange loss. This minus this. What accounting entry need to pass? What accounting entry need to be passed? Recognizing of foreign exchange difference. What is the accounting entry? Exchange difference, exchange loss account debit in the P&L, debit to what? To lease liability, to lease credit. Okay. What is the amount? Refer working note. Is this question clear to everyone? How we have computed interest, how we have converted it into the INR, means functional currency, how we have computed the closing liability. We haven't done anything on the ROU and depreciation in terms of the forex exchange, right? So if the question will come in any foreign currency where the lease payments are in foreign currency, first of all, you need to you need to create your lease liability schedule and your present value calculation in the foreign currency only. Then you have to convert that present value of the future lease rental, means lease liability, in foreign currency, multiply by the rate, exchange rate on the commencement date. This will give you functional currency value. Okay, right? And then you will charge interest and you will convert your interest on the average rate because it's an expense for the period. You will restate your liability at the closing rate, right? And when you are restating your liability at the closing rate, don't pass the accounting entry for foreign exchange straight away. I mean to say, you need to compute what is my closing liability which is coming without exchange difference and what should be my closing liability. The difference will go to the exchange difference, right? So friends, it's 8:28 now. Let's have a break for 12 minutes and we will start at 8:40. Is that clear? 8:40. Okay. Thank you. We'll meet at 8:40. Again move to some concepts, and again I'll come back to a question. So we discussed initial measurement of ROU and lease liability, right? What ROU is equal to? ROU is equal to your present value of future lease payment, which is equivalent to lease liability. Then whatever payment has been made on or before commencement date, it has to be added. If there is any lease incentive, it has to be reduced. Then initial direct cost and present value of asset retirement obligation. These are the four aspects of ROU. Okay. Then friends, after this, let me have a discussion on the next concept. And what is the next concept, friends? So next concept talks about the exemption from ROU asset accounting. What is the exemption? Exemption are of two types, short-term leases and low-value leases. What is my short-term leases? Leases up to 12 months. Leases up to 12 months means 12 months or less. Leases equivalent to 12 months or less is known as a short-term leases, right? Is known as a short-term leases. So my dear friends, two exemptions are there. The underlying asset, the leases of the underlying asset, which is for a period of 12 months or less, will qualify under short-term leases. But if there is a purchase option available for a short-term lease, it will not be qualified for exemption, right? For example, the, let's say, mobile phone. So I am the lessee and I have taken a mobile phone on 11-month leases from my lessor. And there is a and there is a clause in the contract which says that after 11 month, the purchase option is available with the lessee. In that case, short-term lease exemption is not eligible if when purchase option is available. Okay. So that is there. So lease term of 12 months or less is known as a short-term lease exemption. Election shall be made by class of underlying asset to which the right of use asset relates. A lease that contains a purchase option is not a short-term lease. Okay. Right. And friends, quickly let's discuss one aspect here. Let's say there are 5 buildings, 1, 2, 3, 4, 5. Building 1 is for 1 year lease, 2 is 11 months, 3 is 10 months, and building number 4 and 5 is 5 year and 6 year. Tell me, can the short-term lease exemption can be available on all the 5 leases? Answer is no, right? So tell me on which leases this short-term lease exemption is available. On leases number 1, 2, 3, right? On leases number 1, 2, 3. Now, assumingly, I don't want to apply this short-term lease exemption on lease number 1, building number 1, but I want to apply this short-term lease exemption on building number 2 and 3. Is that okay? You are absolutely right, Karthik. Can't do this. You're absolutely right. So this lease exemption, short-term lease exemption, is on the basis of class of asset, right? So in a class of asset, whichever asset is eligible for exemption. For example, in this class of asset, building class of asset, building number 1 to 5, 4 and 5 is not eligible for exemption. So on that 4 and 5, right of use asset lease liability accounting is applicable. But on building number 1, 2, 3, this 3 buildings are eligible for exemption, right? And hence, if an entity is taking an exemption, if entity is taking an exemption of short-term lease, it has to apply on a class of asset. Okay. So if entity wants to apply an exemption on building number 2 and 3, it has to apply an exemption on building number 1 also. Okay. Then low value leases. What is meant by low value leases? Low value leases means leases where the value of the underlying asset is of low value, like furniture, computer, printer, mobile phone, office equipment, etc. Right? Tablet. But if the lessee is subleasing the asset, the lease contract is not eligible for low value exemption. Right? If lessee is subleasing the asset, then lease contract is not eligible for short-term lease exemption. Sorry, low value lease exemption. So, you understand sublease? You understand subleasing? Yes? Okay, very good. So we discussed this exemption part also. And friends, in case of a short-term lease exemption or low value lease exemption, what accounting needs to be applicable? If there is no ROU and lease accounting, then what accounting has to be applied? क्या अकाउंटिंग होगी? अगर लीज और आरओयू अकाउंटिंग नहीं होगी तो क्या अकाउंटिंग होगी? What accounting needs to be applied? Tell me, friends. Simple rent expense to bank accounting. Rent expense to bank accounting. Okay. Rent expense to bank accounting. Is that clear? Is that clear? Yeah. Let's move on. Uh, yes. Now moving further. And discuss this question because at times, students forgot these concepts in the exam. A Limited, a lessee, has taken an office equipment on a lease basis for a period of 2 years. The first year rental is 10,000, the second year rental is escalated to 15,000. A Limited has taken an office equipment on a lease basis for a period of 2 years. The first year rental is 10,000, second year rental is 15,000, escalated to 15,000. Advise the recognition of expense in year 1 and year 2. First of all, in this question, which lease exemption can be available? Short-term lease exemption or low-value lease exemption? It's a low-value lease exemption. It's not a short-term lease exemption, low-value lease exemption. Okay. So now it's a low-value lease exemption. Now the lessee has to recognize expense. Lessee has to recognize expense. Okay. Rent expense to bank. Now the question is, in the first year, the rental payment is 10,000. The second year rental payment is 15,000. So the how much rent expense is going to be recognized in the first year? That is the question. Karthik is saying 12,500. Karthik, why not 10,000? The payment has to be made for 10,000 rupees. Saminathan is also saying the same thing. And Saminathan is saying 25,000 divided by 2. Karthik is saying, sir, on a systematic basis. You're absolutely right. So if a company is applying a short-term lease exemption or low-value lease exemption, in that case, the rental expense has to be recognized on a systematic basis. Systematic basis means on a straight line basis, right? So total rent means 25,000. Average annual rent is 12,500. What is the accounting entry? In the first year, rent expense has to be debited by 12,500, but bank is credited by 10,000. So 2,500 rupees of lease equalization reserve is going to be created. In the second year, your rent expense has to be debited by 12,500, but your bank is credited by 15,000. So your lease equalization reserve is debited by 2,500. Okay. Right. So this is your accounting entry on recognition of rental expense when you are recognizing a rental expense on a straight line basis. Okay. Clear? Is that clear? I hope it is clear to all of you. Yes or no?
Second, just a minute. Please stop on this entry.
Yeah.
So there's one more query. Means this was a low value lease, right? तो इसमें तो हमने ये लीज इक्वलाइजेशन रिजर्व को खत्म कर दिया. But can it be carry forward for more than 2 years also for this low value lease? Short term lease cannot be carry forwarded.
See, short-term lease a lease cannot be a short-term lease if it is beyond 12 months. You can't apply the short-term lease exemption, right? But for a low-value lease, it could be 5 year also. For example, I have taken this mobile phone on a lease basis, right? at a lease rental of, let's say, 5,000 rupees per annum. Okay. And this is for 5 years, assuming the life of the mobile phone is, let's say, 5 years. Okay. And the lessee is paying a rental of 5,000 in the first year, 6,000 in the second year, 7,000 in the third year, 8,000 in the fourth year, and 9,000 in the fifth year, assuming, right? The 5 year lease contract is there. Okay. And rental is getting escalated by 1,000 rupees every year. So how you will recognize the rent expense here? What you will do, you will aggregate the total rental, right? What is my total rent in 5 years? Because I have entered into a 5 year contract. So entering into a 5 year contract, I have to pay, let's say, 5 plus 6 plus 7 plus 8 plus 9. Okay. So whatever amount will come, you will divide by 5. You will get an average rent, and you will recognize your average rent every year as an expense. So when you do that, in the first 3 year, that will be a credit, and in the last 2 year, that will be a debit, right? Okay. So it could be beyond 2 year also. It could be any number of year beyond 1 year in case of low value lease exemption, right? Is that clear? What's your name? Madam Asthana. Is that clear? Yeah.
Yes, sir, it's clear. Thank
Okay.
you. My name is Shachi, by the way.
Your name is
Shachi.
Sachi. Okay. Your surname is Asthana.
Yes, sir.
Yes. So let's move further. And friends, uh, now I have to cover a concept on, just a minute. Quickly, I need to do a revision of a concept on. Just allow me a second. I am just opening a concept to revise, and then I'll take a question on that concept. This modification is okay. I'll cover this. Okay, let me cover this concept from the presentation itself.
Sir,
Yes.
I have a question.
Please confirm if my presentation is visible. Is it visible? Whether my presentation is visible now?
Yes, sir. Visible, sir.
Okay. So friends, at times when you're entering into a lease contract, right? What happened? You are paying not only for lease component, you are paying for a non-lease component as well. For a non-lease component also, right? What does it mean? So for example, you might be living in a society. When I say society, I'm talking about a high-rise kind of a society, right? A lot of builders societies are there. So where you are paying a rental and you are paying a maintenance also, maintenance charges also. Okay. So this maintenance charges is for a service. Okay. So when you are paying a rental for occupying a space, right, it is a lease component. But when you are paying for rental, when you are paying for electricity, when you are paying for water, when you are paying for common area maintenance, so what these all are? Is it a lease component or is it a non-lease component? It is a non-lease component, right? Non-lease component ही है ना? It is a
Yes, sir.
non-lease component. So standard says that whenever there is a lease and non-lease component, like you have, like in my society where I'm living in Gurgaon, so what the maintenance is almost 8,000 rupees per month. The maintenance and the rental is almost 55,000 to 60,000 rupees per month. Okay. So what landlord do? Landlord says that I will charge you 65,000 rupees all inclusive. All inclusive means this 65,000 rupees includes your rental, means your charges for occupying my flat, and since you have occupied my flat, you are enjoying the services of the society, right? So that is maintenance also. But the landlord has not bifurcated what is rent and what is maintenance. Landlord has told you just need to pay me 65,000 rupees. You're not required to pay anything. I will pay to the society separately for the maintenance. That is one kind of a contract. Second kind of a contract, there are many tenants where the landlord says that you have to pay me a rental of, let's say, 55,000 rupees, and whatever maintenance charges will be there, you have to pay to the society directly. Okay. So, friends, this is the second kind of a thing where landlord is only charging a rental, only lease component. He is not charging a non-lease component, and non-lease component has to be borne by the lessee separately. It is not part of your lease contract. In that case, there is no question of separation of a lease and non-lease component. But what happens when the landlord is charging a package amount, a bundle amount, right? And in the package amount, landlord is providing a lease service as well as non-lease service, right? A lease service and non-lease service. Okay. So lease component and non-lease component. So standard says that from the lessee perspective, there are two options available. What are the two options available? Option number one, the lessee can allocate the consideration, means the lease payment. Like the lessee is paying 65,000 rupees to the landlord. So lessee can allocate this 65,000 rupees in the ratio of the fair value of lease component and non-lease component. For example, those who are only paying rental and actually paying the maintenance, they are paying a rental of 55,000 rupees. Example. And the maintenance is, let's say, 8,000 rupees. Maintenance is 8,000 rupees. So now you are paying 65,000 rupees all inclusive. There is no allocation, no bifurcation of that. Are you getting me? 65,000 rupees you are paying, पर उसका कोई bifurcation नहीं है. But this 65,000 includes my rental and maintenance both. So let's say the standalone selling price, the fair value of rental is 55,000. The fair value of maintenance is 8,000, for example. So this 65,000 has to be allocated in the ratio of 55:8, right? And this is how you will compute your lease and non-lease component, right? And of course, for the lease component, you have to what? You have to do what? For the lease component, you have to create a right of use asset and lease liability. For the non-lease component, it is just like a normal expense accounting, right? That is option number one. Option number two, in the standard, a second option is also provided, and you will like that second option. But my dear friends, it's not about your liking or disliking. It's not about your liking and disliking. It's about the liking and disliking of examiner, right? And what is that option number two? First of all, let me tell you. Option number two tell you are not required to split the lease and non-lease component. You can apply a practical expedient. A practical expedient is given in the standard, which says that at times it is difficult to allocate, right? At times, because there could be more than two non-lease component as well. At times it is difficult to bifurcate, segregate, allocate that, and hence, as a practical expedient, what you can do, you can decide, you can choose not to bifurcate, not to segregate, not to separate the lease and non-lease component. And whatever consideration you are paying, whatever lease payment you are making, you can consider the entire payment as a lease payment. Entire payment as a lease payment. Is that clear or not clear? Sir, this second option is a good option. We are not required to allocate, we are not required to check the standalone selling price. But Sachi, what you will do if the question is telling you not to apply the practical expedient, then what will you do?
So then we'll go for option number 1 and
Then you
allocate.
have to go for option number 1. You have to, of course, the standalone selling price will be given in the question because it is not the real life. So the question will provide you the standalone selling price and you need to allocate that lease payment, I mean to say the consideration, into the ratio of standalone selling price of lease component, non-lease component. And might be the question may be asking create ROU asset also. What is the value of the ROU asset? Then you need to create a right of use asset with the value of what? Lease component only. Okay. Is that clear? So friends, let me quickly take you with a question on this. Allow me a minute. Question number. I'm just sharing a Word file. Yes. Question number 4. I hope this Word file is visible to everyone.
Yes, sir.
Entity X, a lessee, entered into a lease agreement with entity Y, a lessor, to lease an entire floor of a shopping mall for a period of 9 years. For a period of 9 years. So this period is lease term is 9 years. The annual lease rent of 70,000 is payable at year end. Okay. So payment is at year end and this annual lease rent is 70,000. To carry out its operations smoothly, entity X simultaneously entered into another agreement, which is facility agreement, with entity Y for using certain other facilities owned by entity Y, such as passenger lift, DG set, power supply infrastructure, parking space, etc., which are specifically mentioned in the agreement for annual service charges amounting to rupees 1 lakh. Okay. So 70,000 is the rent payable at year end. Then they are saying they entered into a separate agreement for rupees 1 lakh for using these services. As per the agreement, the ownership of the facilities, as per the agreement, the ownership of the facilities shall remain with entity Y. And lessee's incremental borrowing rate is 10%. Lessee's incremental borrowing rate is 10%. This is what is given. The facility agreement clearly specifies that it shall be coexistent and coterminous with lease agreement. The facility agreement shall stand terminated automatically on termination or expiry of lease agreement. Means this facility agreement is dependent on the lease agreement. And whenever somebody read this facility agreement, it has to be read along with the lease agreement. Let's say if lease agreement will be terminated, this facility agreement will be automatically terminated. Okay. Right. So friends, entity X has assessed that the standalone selling price of lease agreement is 1,20,000 per year and standalone price of the facilities agreement is 80,000 per year. Entity X has not elected to apply the practical expedient in paragraph 15 of Ind AS 116 not to separate non-lease component from lease component. Accordingly, it separates non-lease component from lease component, right? How will entity X account for lease liability at the commencement date? Friends, in this case is like a combination of a contract, number one. Number two, there is a lease component, there is a non-lease component. And what amount this entity is paying? This entity is paying, how much amount this entity is paying in total to the lessor? What is the consideration which is transferred from lessee to the lessor?
1,70,000.
1,70,000. Very good. 1,70,000. So now let me tell you why this, why the standard says about, separating or segregating lease and non-lease component. What could be the reason for that? Standard क्यों बोलता है कि आपको लीज नॉन लीज कंपोनेंट सेपरेट करना चाहिए? What could be the reason for that?
Taxability in the hands of lesser.
Taxability in the hands of
Lesser.
So while accounting standard does not care about taxability, accounting standard takes care of true and fair view of the books of accounts, right? The right presentation in the books of accounts, true and fairness of the books of accounts, correct? Now let's say I am the lessor and you are the lessee, and I am giving you a lease component and a non-lease component, a lease service and a non-lease service. And I am telling you that you need to give me 1,70,000 rupees. Okay, 1.7 lakh rupees for both the services. I need 1.7. It's up to you. If you want it to show 80,000 in lease part, so we have entered into two contract at the same time, right? One non-lease component agreement, which is known as a facility agreement, and one is lease component agreement, which is rental agreement, right? So I told you, I don't mind. You just need to pay me 1,70,000 in total. You want to write down 50,000 in the lease component, you can do that. 1,20,000 you want to write on the non-lease component, whatever you want, you can do that. Right? So you are planning your books of accounts and you are thinking, if I will put, let's say, 1 lakh rupee in my lease component, my right of use asset value will be higher. Okay. So my depreciation will be so and so, and my interest cost will be so and so, for example. So you are thinking that way, right? So you are analyzing how your P&L will look like in the next 4 to 5 year, whatever, in the next years consisting of your lease period. And then you are planning, and then you are coming to me and you are saying, sir, can we do one thing? Can I put 70,000 in my rental agreement and 1 lakh in my facility agreement? I said, I'm okay. Till the time you are paying me 1.7 lakh per month, I'm okay. I said that. So the point here is, people started planning. They started manipulating their books. And that is why standard says that, while standard has given you the second option also, but in the second option, standard has told you can't plan. You cannot plan, right? The only thing is whatever you are paying, you can create a right of use asset for that, right? But in the first case, standard has told whatever total you are paying as a consideration, you need to allocate between the lease component and the non-lease component. You need to allocate between the lease component and the non-lease component. Okay, this is what standard says. So here, while I am paying 1,70,000 in total, but what is my standalone selling price of the lease component? 1,20,000. And what is my standalone selling price of facility agreement? Means value of the facility services? 80,000. So I need to allocate this 1,70,000 into, I need to allocate this 1,70,000 in the ratio of what? In the ratio of standalone selling price of rent and service charge, right? For example, My rental, building rental is 120, my service charge is 80, my total is 2 lakh, right? So I need to allocate this 1,70,000. I need to allocate this 1,70,000 in the ratio of 120 is to 80. Means in the ratio of 60 is to 40. Is that clear or clear? Clear in mind or clear from mind? Is that clear in mind or clear from mind? Lavanya, is that clear? Ayush, Shachi, Selendra, is that clear?
Yes, sir. Clear.
Okay, perfect. And friends, so we have allocated this bit in the ratio of 120 is to 80. So 1,02,000 is my building rent. 68,000 is my service charge. Tell me what is the accounting treatment of this 1,02,000 and 68,000? What is the accounting treatment?
1,02,000 will be used for the purpose of ROU and service charge will be expensed off.
Yes, you're absolutely right. 1,02,000 is just my lease payment. Okay. It has to be used for the purpose of computing ROU, and 60,000 is my normal expense, my service charges expenses. Okay. So maintenance expenses. It has to be accrued and recognized in the P&L as and when it gets accrued. Okay. So likewise here in this case, what was the periodicity of this lease agreement? It was 9 years, right? It was 9 years now. Yes. So 1,02,000, what we did, this 1,02,000 is my 9-year payment. My discount rate is 10%. This is my present value of lease payment. So 587,316, we will debit the right of use asset and credit the lease liability. And for the service charges part, you have to every year you have to 68,000 rupees you have to debit as a maintenance expense account, debit to bank account or to whatever, to syndicators, creditors to bank, whatever, right? Is that clear? Yes. Okay. Now let me take you to another concept of modification. Okay. Let's talk about modification. Friends, important concept, modification. What is meant by lease modification? And let me ask you a question first. Let's say a contract, there is a lease contract of 5 years. Okay. And Salendra, this question is to you. The lease contract is for 5 years. And in the contract, it is written that every year 10% rent will be escalated. So whatever is the rent in the first year, it will be modified in the second year, third year, fourth year, fifth year, right? With the escalation. Tell me, is it a lease modification? Whether this change in rental every year is a lease modification?
Yeah, it's part of in written way, like clearly mentioned. Every year we'll revise in this way. So in that case,
It means
we can say it's a part of lease agreement. It's a part of written agreement.
no. So it's a part of lease agreement. So my question is whether it will be considered as a lease modification, yes or no?
I think so. It should be yes.
No. It is not. It is not a lease modification. So Shailendra, as we understood, what is my lease payment? My lease payment is fixed payment plus in substance fixed payment plus variable payment depending on index or rate, exercise price, termination penalty. We covered those aspects now.
Okay.
So
Yeah.
as I told you, the lease agreement is for 5 years. When I entered into a lease contract, in my first year the rent was 10,000 rupees. And I said that the lease contract is for 5 years. I said that every year rent will be escalated by 10%. आपका बहुत सारी जगह पे, if I talk about Delhi NCR, the rent is escalated by 10% every year. Not every year, 11 months. Every 11 months. हर 11 months में लैंडलॉर्ड 10% बढ़ा देता है रेंट, राइट?
Yes.
So that is not a lease modification. It is part of the, this escalation is part of the original lease contract only, right? So on the day one, on the commencement date, Shailendra, on the commencement date, when you are computing your ROU, how you are computing your ROU? You are taking the cognizance of what? You are taking the cognizance of the escalated rental only. Like in the first year, 10,000 is the rental. You know what amount you will use for the present value calculation? This much. This one. Escalated rental. Escalated rental. So the thing is, you will use these amounts for computing the lease liability and right of use asset. Tell me, if you're using these amounts, it means you have already taken the cognizance of the escalated rentals. So it
Yes,
will
sir.
not be considered as a lease modification. What is a lease modification? Lease modification means a modification which was not part of the original lease contract. Lease modification will arise in three situations which were not form part of the original lease terms and conditions. Is that clear?
Yes, sir. Thank you.
Is it clear or not clear?
Clear, sir. Thank you, sir.
Yes? Okay. Yeah. So, for example, what could be the lease modification? Change in the scope of leases. Like when I was living as a student in Lakshmi Nagar. Have you heard about Lakshmi Nagar area in Delhi? Have you heard about Lakshmi Nagar area in Delhi? This area is known as a den of CAs, chartered accountants. Okay. Friends, when I was preparing for my CA finals so I was talking about 2005, 2006. So how much years back? 20 years back, right? I qualified in 2007. So I qualified around 19 years back. So friends, when I was preparing for my CA final, I was living in a flat in Lakshmi Nagar area in Delhi. So we were three friends and we had occupied two-bedroom flat. We had occupied two-bedroom flat. While the flat was three-bedroom, but we only need two-bedroom, and that is why we negotiated with the landlord and we said that, sir, please provide us a decreased rental and you can give us only two rooms. So what landlord did? Landlord gave us two rooms, and landlord has already, there were three rooms, but the third room was locked by the landlord, and landlord was using that room for his store purposes. So one of my friend came, right, again for the preparation of CA final. One of my friend came and he said, Alok, I want to live with you guys, right? So we said, okay. So while we had entered into an agreement with our landlord for occupying two rooms, okay, at a rental of 10,000 rupees. But now since my friend had come, my friend had came, so we requested our landlord to increase the scope of the lease contract, and we said, instead of two rooms, sir, can you please provide us the three rooms? Means that, can you provide us a third room also? So friends, whether this third room was part of the original lease contract? Yes. Answer is no. You are absolutely right, Sachi, Saminathan, Karthik, Ayush, you are absolutely right. Right. It was not part of original lease contract. The original lease contract was carrying 10,000 rupees and two rooms. Right. Now the scope is increased, which was not part of the original lease contract. It is known as a lease modification. Right. Change in consideration. Change in consideration. Friends, change in consideration means, and typically in Gurgaon, what happened? Let me tell you, the property prices become skyrocketing. Now, since last 1 year, it is little stable. But if I talk about after COVID till mid of 2025, after COVID till mid of 2025, the property prices were skyrocketing. And let me tell you what was happening in Gurgaon. Let's say the 3-bedroom flat, which was available at a price of 1 crore up to 31st March 2022. On 31st March 2024, it became 2 crore rupees. So just in 2 years, the price has doubled. The price has tripled. So I was living in a rental accommodation, right? Paying a rent of 40,000 rupees per month. And my contract says that after every year, there was an escalation of 10% in the lease rental. 10% is the rental escalation after every year. Friends, when the property prices got doubled or tripled, tell me whether the rent will escalate at 10% only. The landlord started demanding. Landlord says nothing doing. 10% was your original contract, right? 10% escalation was part of the original contract, but now the property prices has increased like anything, right? So I will charge at least 25% escalation, because already the rental has increased in the market. Or if you don't want to pay me, you can leave my house, right? I'm giving you 2 month notice or 1 month notice, whatever is applicable. You can vacate my house, and when the new tenant will come, the new tenant will come at 50,000 rupees. Guys, whatever I'm telling you, have you seen this real life scenario? Like the example of 2 room and 3 room, it is a real life scenario, practical scenario. This increase in consideration, increase in lease payment, it's a real life scenario. So I discussed with my wife, and my wife told, if we vacate this house and if we will go to the new house, of course we have to pay a higher rental, because the property prices has increased, rental has increased. So let's agree to our landlord. So friends, we have paid a escalated rent of 25%, a escalation of 25% instead of agreed escalation of 10%. Tell me, in this case, this 25% escalation, which is 15% more escalation in comparison to the agreed escalation. Tell me, is it a modification or not? Yes, it is a modification. This change in consideration is a modification which was not part of the original contract. Tell me, when I have, commenced the lease contract, when I occupied that flat, whether I would have factored 10% escalation or this 25% escalation in computation of my ROU. 10% ना, because जो contract में लिखा है मैंने तो वही किया ना, right? So the 10% escalation. But right now, eventually after 3 or 4 years down the line, it become 25% escalation. So this is a lease modification or change in the lease term. For example, we have initially considered a lease term of, let's say, 10 year, but now it is increased to 15 year, decreased to 6 year. So this is also lease modification. Friends, tell me why lease modification accounting is important. Why the concept of lease modification is given? Because either your consideration is changing, your scope is changing, or your lease term is changing. You have not accounted that when you initially accounted your ROU and lease liability, you have not accounted. So that is why it is important to account for the lease modification prospectively. Whenever this modification happens, you need to account for this modification. You need to account for the lease modification. Is that clear? Friends, whenever there is a lease modification, either it will be treated as a separate contract or it will be treated as a adjustment to the existing contract. यही तो possibility हो सकती है ना? Only these two scenarios will be there. Either it will be a separate contract or it will be treated as a what? Adjustment to the existing contract, right? So if it will be treated as a separate contract, तो क्या होगा? Nothing. There is no changes in the existing ROU or lease liability. For the new contract, for the separate contract, you have to create a ROU and lease liability separately. And whenever there is an adjustment in the existing contract, you need to change, you need to revise your ROU and lease liability. Any challenge, any doubt up to this level? Any doubt? Any question up to this level? Friends, it's been 2 hours and 30 minutes. So we are talking on this Ind AS 116 revisionary part since last 2 hours 30 minutes, of course, excluding 10 to 12 minutes of break time. So are you enjoying the revision? Are you able to understand these concepts, quickly recap these concepts, right? Or you are not? Okay, great. I got the confirmation from 6 participants. Great. So thank you so much. And friends, so as I told you, there could be two scenarios. Either it could be a creation of a separate contract. Yes, Shachi.
Sir, will we be getting this this note also na for
Yes, definitely. But the only thing is, Sachi, I don't know if you have covered the complete classes on Ind AS 116 from ICAI
No, sir.
BOS,
No, sir.
because I have covered this Ind AS 116 in 6 classes in detail.
So recording is there on the portal?
Yes, recording is there. Recording is there. So the notes which I am presenting right now, these notes, if you see, there are multiple tabs, right?
Yes, sir.
And every concept is coupled with an example, right? First, like if you see, first concept is there, then there are real life simple examples are there from which you will be quickly able to understand what does it mean. Okay.
Yes,
So
sir. That
examples are there. Then you can see my own example. Then you can see the illustration of ICAI study material, right?
yeah.
So how I have covered? First, I have covered the concept along with the examples, simple example, then proper examples, then ICI questions, study material questions, and RTP questions. Okay.
Okay.
So this entire file consists of that. So this file is the outcome of 6 classes.
So this file will be there in the description or not?
Yes, this file will be there. So when you will download the notes from the BOS portal, right, you will get this file also.
Sure, sir. Thank
Or
you.
if not, so you can just so I will again share with ICI. So probably they will again upload it, right?
Sure.
Yes, sir. It is available in the live virtual class section. The notes to
Okay.
the. It
It
is
will
available.
available in the live virtual classes section. Okay. So
Yes, sir.
Shachik, you can download from there.
Yeah, I will download. Thank you, sir.
Yeah. Yes. So Karthik, one thing I want to tell you, standards like Ind AS 115, Ind AS 116, like we did 2 questions, right? So if you know the concept very well, and when you will break the long question into the small questions, right? So when you break the long question into small parts, you will be easily able to crack the examination level questions. You will be easily. For example, I can give you few examples around it where the students are making regular mistakes. Mistake number 1. They always think that the rental has to be at the end of the period. Is it so? Not necessary. The rental could be advance also, right? In real life, generally rental is paid in advance, but in examination question, right? So it could be advance, it could be in arrears. It is very important to read the question carefully because it impact your present value calculation. If it is an advance rent, if it is rental is payment in advance, your first discounting factor will be 1 always, right? That is number 1. So beginning and arrears, you need to look at that. This is where students are making mistake. Number 2, students are making mistake in the exemption part also. The standard talks about short-term leases, and the question talks about short-term leases, and the question gives you the purchase option also. Still, the student can, the student says that, this lease is up to 12 months, and short-term lease can be applied on that. So these are small concepts where the student make a mistake. Number 3, like question I have shown you. In that question, that facility agreement and the facility agreement and that the rental agreement, those were two separate agreement, but it has to be read in collectively, right? So where people make a mistake, they think that the separate contracts are there and the values have been given. So what we need to do, we need to, for example, in our question, 70,000 was the rental amount, right? 70,000. 1 lakh was the facility charges. So total was 170. But finally, what we concluded 1 lakh 2,000 is a rental and 68,000 is a service charges. So normally student don't do that. And when the question is, the same question came in the exam, so many students have done the mistake. And what mistake they have done? They consider 70,000 as a lease rent and 1 lakh as a expense, maintenance expense. And they created right of use asset and lease liability on the basis of 70,000. Right? They did the calculation basis 70,000. So that is wrong. So the point is, if you need to control the long standards, big standards, because the question can come from anywhere. If you have to control that, what you need to do? You need to understand these concepts in detail. You need to understand these concepts very well. This is how you can control the standard, otherwise not. This is how you can control the question, otherwise not. Break that question into parts. Understand what is the requirement. Apply that. Right? And believe me. See, I'm a teacher. I'm working in an industry also. And in my company, these leases are extensively used. I'm working with Indigo Airlines and these leases are extensively used. Right? Ind AS 116 for us is beyond standard. So much complexity is there. How we are solving? How we are finalizing an accounting policy? How we are finalizing the accounting entries? How we are finalizing the calculations? And believe you me, the real life scenarios are much tougher than the examination questions. You agree or agree to disagree, Karthik? These contracts are 200 pages, 300 pages contracts, right? Lot of juggleries, lot of complexities, right? Lot of intricacies. And what I have learned Ind AS 116 like you guys are learning. And might be at a point in time, a student may have more knowledge than the teacher. May have. So how we are solving real life problems? Just by understanding Ind AS 116. Right? Like we had a scenario, and I'm telling you a real life scenario. We have taken an equipment. Okay. And what was the, how the contract was structured? Contract was saying that you have to pay a rental on the basis of hours you are using, And so of course it's a variable rent. So if it is a variable rent, it has to be charged to P&L, right? Which variable rent has to be taken into the lease payments? Only that variable rent has to be considered into the lease payment, which is on the basis of index or a rate. And that was not on the basis of index or a rate. That rental was on the basis of hourly usage of the equipment. But in the contract, somewhere in the contract, a clause was there which says that the company has to pay a rental equivalent to the minimum hours of this equipment. The company has to pay a minimum rental equivalent to the X hours of this equipment. Friends, because I understand in AS 116, I said that, oh, this is indicating the in substance fixed payment. So what we did to that extent, we created right of use asset and lease liability. Beyond that, for example, the minimum is, let's say, 500 hours minimum, for example. So we created ROU and lease liability to the extent of 500 hours. But actually, let's say we availed 550 hours, then what? the rental equivalent to 50 hours has to be charged to the P&L as a rent expense. Okay. So Ayush, Karthik, just by understanding Ind AS 116, reading a contract of 100-200 pages, picking the important parts from the contract, we applied Ind AS 116 accounting, finalized the accounting entry, finalized the accounting memo, right? Accounting policy, and did the accounting. And believe you me, the real life scenarios are beyond standards, beyond standard, right? Is that clear? So just one advice to all of you. With my last 11-12 years of teaching experience, one sincere advice: you need to understand the concepts very well. Number one. Number two, whenever the question is long, break that into parts, right? And then start solving the question. You will be able to break that and you will be able to crack that, right? If not 100%, I can tell you, you will be able to achieve 90%, 95%, right? And the marking is stepwise marking. Okay. And the second advice is to do more and more practice. The first is understanding the concept. The second is practice, right? The more practice will enable you in solving the questions more quicker and faster. Okay. Yes. So friends, when a lease modification will be treated as a separate contract, it will be treated as a separate contract when there is an increase in the scope and increase in rental is also in line with the market rental, market fair value. Okay. So for example, A Limited has entered into the lease contract of 10,000 square feet of space at the rate of 50 rupees per square feet of monthly rental for a period of 5 years. After 2 years, A Limited has entered into an addendum to extend the area by 5,000 square feet at the rate of 50 rupees per square feet, which is commensurate with the market rental of the property. So in this case, increase in consideration is on the basis of fair value of the increase in scope, and hence this contract will be considered as a separate contract and not as an adjustment to the existing contract. Hence, a fresh right of use asset and lease liability needs to be recognized for the additional space of 5,000 square feet of area. Right? Clear? Illustration number 34 of ICAI study material is a very good illustration, right? In detail, I have solved this illustration, right? I would request you guys to please solve this illustration, which is illustration number 2 of illustration number 34 of ICAI study material, right? I have solved this illustration. You can see the entire calculation in the real life classes of ICAI. Friends, I would love to discuss the concept of sublease. Very, very, very important in the real life scenario also, and the examination perspective also. So let me discuss the sublease concept. Separation of lease and non-lease component I've already discussed. Just allow me a minute. Okay, let me cover this sublease concept from here, from my presentation. Yes. Sublease component, sublease concept. Friends, lessor accounting is very simple. If I talk about lessor accounting is just same like accounting standard 19 and the old Ind AS 17. The majority of the changes, the major changes was in the lessee accounting, not the lessor accounting, right? So let's discuss the sublease concept. What is meant by sublease concept? Friends, For example, there is a lease contract between A and B. Okay. So who is A? A is the head lessor. A is known as a head lessor or a lessor, original lessor. And B is known as a original lessee. What B has done, B has subleased this asset to C. B has subleased the asset to C. Okay. So in this case, B has subleased the asset to C. So now, in this scenario, who is called what? In this scenario, when A has leased to B and B has subleased to C, A will become a head lessor. A is the original lessor who is called as a head lessor. B, who is the original lessee, will become an intermediate lessor. B, who is the original lessee, becomes an intermediate lessor. Right? C, who is a sublessee, is called as a ultimate lessee. So ultimately, in case of a sublease, who is using the asset? Who is using the asset? Original lessee or ultimate lessee? Ultimate lessee, sublessee, right? Ultimately, the asset is used by him, the sublessee or ultimate lessee. Okay. So friends, in this scenario, this two contract emerges between A and B and between B and C. Between A and B and between B and C. And what it says, let me tell you. For example, life of car is 9 years. Okay. A Limited, who is a head lessor, has leased the car to B Limited, who is a head lessee, and become an intermediate lessor. Why he become an intermediate lessor? Because he subleased this car to C. He subleased this car to C for 7 years. For 7 years. Okay. Now in this case, there are two contracts. Contract between A and B and contract between B and C. Contract between B and C. Contract between A and B is an original lease contract and contract between B and C is a sublease contract. Okay. So friends, let's, as Ayush, I have told, Karthik, I have told you, let's say this question will come into the exam, and of course, this is a pictorial presentation, but when the question will come into the exam, there were a lot of text, lot of statement, lot of text, okay, lot of English. So let's say this kind of question came in exam with lot of lines, statement, text. So what you need to do? You need to understand there are two contracts, A, B, B, C. And the question is asking you to conclude the accounting for this entire lease and sublease contract. So you start right from the beginning. Your lessor, main lessor. Tell me what accounting your main lessor, A Limited, will do. A Limited will do the lessor accounting, right? A Limited will do the lessor accounting. So from the lessor accounting perspective, operating lease and finance lease, the concept still exists, right? The concept of operating lease and finance lease still exists from the lessor perspective, right? So friends, in this case, the life of the car is 9 years and A Limited has given the car on a lease for 7 years. 80% of the life. Tell me, it is a finance lease or operating lease? From the lessor perspective. Standard says that when the lease period is for the primary period, when the lease period is for the majority of the economic life of the asset, economic life of the asset is 9 years. Lease period is 7 years. And what is meant by major part of the economic life means more than 75%. More than 75%. So this is more than 75%. It will become finance lease. It will become finance lease. Okay. It will become finance lease. So friends, what A Limited will do? A Limited will de-recognize the car PPE in the books of accounts and A Limited will recognize the lease receivable, right? This is the lessor accounting. Same like accounting standard 19, same like old Ind AS, 17. Okay, friends. So A limited accounting is done. Of course, the numbers will be there. You can compute that because you understand the lessor accounting and the lessee accounting. Number 2. Now, what you need to do? In the first lease contract, we have done the lessor accounting. Now we have to do the lessee accounting. That is in the books of B limited. So what you need to do in the B limited? Of course, B will create a right of use asset and lease liability. B will do the accounting for 7 years. B has to pay the rental for 7 years. So whatever is the rental for 7 years, B will compute the present value calculation and B will recognize right of use asset and B will credit lease liability. Okay, right? Friends, any problem? Any gila shikwa? Any doubt? Or things are clear? Clear? So contract between A and B, accounting has been done. Contract between A and B. Now let's come to the contract between B and C. Friends, now what is the position of B in the contract of B and C? B क्या है? B and C के contract में B का designation क्या है? Lessor. B is a lessor. You are absolutely right, Lavanya. B is a lessor. But B is a original lessor or B is a which kind of lessor? Intermediate lessor. B is a intermediate lessor. So now in the capacity of a lessor, B has to do the lessor accounting. Now, how B will do the lessor accounting? How B will do the lessor accounting? See, again, from the lessor perspective, B has the option of operating lease and finance lease. So B, which kind of asset B has? Right now, whether B has the car or B has the ROU asset. B has the ROU asset. So B has the ROU asset for 7 years. Okay. And B has subleased this ROU asset for 7 years. Means 100% of the economic life. Friends, when there is a sublease accounting, so intermediate lessor, for the purpose of finance lease, intermediate lessor evaluate the sublease period with the original lease period, right? So the sublease ROU has to compared with the original ROU, right? The life of the ROU has to be compared. Life of the ROU, not the life of the asset. Have you understood what I'm saying? See, A limited has compared with the life of the asset. A limited has compared that 9 years a life, more than 75% I am giving, hence it is a finance lease. What B limited will do? B limited will compare with the life of the ROU. Okay, my life of the ROU asset is 7 years and I am giving it for 7 years. It is a finance lease for me. If it is a finance lease, then what accounting B limited will do? B limited will de-recognize the ROU asset like A limited has de-recognized the PP. B limited will de-recognize the ROU asset and recognize the finance lease receivable. Okay, right? And my dear friends, what C limited will do? C is the ultimate lessee. C has to recognize the lease rentals. C has to recognize the right of use asset on the basis of present value of the lease rental on the amounts which C limited is paying to B limited, right? Might be A limited has given this car to B for 1 lakh rupees rent per annum. B limited has subleased this car to C at 1.5 lakh rent per annum. So B limited will de-recognize the ROU which is created on 1 lakh rupee per rental per annum, right? But C limited will, so B limited has recognized the ROU at 1 lakh. C limited will recognize the ROU at 1.5 lakh, considering 1.5 lakh, right? So this is how this entire sublease accounting has to happen, my dear friends. Any question? Friends, any question? So there is a lessor accounting as well. Lessor accounting I have covered briefly while taking this example, right? Sale and leaseback, my dear friends, sale and leaseback, I would say this question was there in my Word file also and in my Excel file also. This sale and leaseback, I would suggest you guys that please, this is a very good question, and I would request you guys to refer this sale and leaseback from my Excel file. I have covered this in detail in my regular classes, okay? And entire calculation, detail, explanation, this is mentioned in this Excel file in a briefed manner, in a very brief, right? So you can use this Excel file for the purpose of sale and leaseback transaction. So friends, we have covered this Ind AS 116 revision in this one class, I would say, in this one class, right? If you have any question, we can quickly cover this question, right, in next 3-4 minutes. Otherwise, I can wind up this class. I hope you have enjoyed the concepts which we have covered for identified asset, right to control the use of the asset, lease period, which is non-cancelable period, rent-free period, optional renewal period, if lessee is reasonably certain to avail the renewal option, and optional termination period, if lessee is reasonably certain not to avail the termination option. Then lease payment, which is fixed payment, in substance fixed payment, variable payment depending on the index or rate, exercise price of the purchase option, termination penalty, and then your residual value guarantee given by the lessee to the lessor. Okay, from the lessor perspective, one more item will be added into the lease payment. And what is that item? That item is residual value guarantee given by anyone. Given by anyone. So we have covered that part. Then what we have covered? We have covered after that what is meant by inception date, what is meant by commencement date, the discount rate. Discount rate, the first choice is lessor IRR. The second choice is lessee's IBR, incremental borrowing rate. Okay. Then we have covered the recognition of right of use asset on the basis of present value of lease rentals plus any payment made on or before commencement date plus initial direct cost plus present value of asset retirement obligation minus lease incentives. Okay. Then what we have covered? We have covered the low value lease exemption and the short term lease exemption. If there is a purchase option, it is not a short term lease, and if there is a sublease, it is not a low value lease. Okay. So this is what we have covered. Then we have covered, my dear friends, lease modification, right? Lease modification means modification which are not part of the original contract. Having a escalation as per the agreed contract, it is not a modification. Then we have covered the segregation of lease and non-lease component. We have discussed a question on the forex lease payments, that how in case of a forex lease payments, how the ROU and lease liability needs to be measured and computed. Then we have covered the sublease accounting. We have touched base on this part, which is a lessor accounting as well. Thank you so much, friends. I hope you guys have enjoyed the session, right? And I would request all of the new students who is directly entered into the revisionary class, I would request you, please listen my complete Ind AS 116. You will find it very interesting because it contains lot of I would say real life example. And Saminathan, since you have attended that class, so just in 1 minute you can brief to the other student as well, right? That whether those 6 classes on 116 were effective or not.
Yes, sir. Thanks for giving the opportunity. I attended the live classes. The live classes, it will give from initial to end, that end to end, full entire in days with respect to the leases, not only leases, wherever the class is taken. The thing is that with the own example and giving the concept clarity in full detail, and also the lot of illustration from the ICAI study material. In fact, more than lot of questions is solved with the concept clarity. Without clearing the concept clarity, he will not move to another subject, another concept. That is what I feel. I really thanks to you, sir, for such a wonderful opportunity. You are here to bless us. Really, it's wonderful. Also, I am thanking ICAI Board of Studies for this such a wonderful opportunity.
Thank you,
This class,
Saminathan. Thank
and
you.
one more thing, this class is more than the paid class. That is what my real feel is that. Thank you so much, sir.
Thank you, Saminathan. So please refer those full classes so that you have the full clarity, and then you can just again listen this revisionary classes. And when you attend this full classes, you are not required to attend that revisionary class on that Ind AS 116 because you have already attended it, right? Thank you so much. Bye bye.
Sir,
Take care.
I have a question, sir.
Yes, yes.
Sir, if the contract is for like 4 years, but we are utilizing the asset for only for 3 months, then how we will calculate the lease terms? Or is it like a 4 into 3, 12 months, or it is for 4 years?
Sorry, can you repeat your question and can you please speak little louder?
Yes, sir.
Yeah.
Am I audible, sir, now?
Yeah, you are audible. You are audible.
Yes, sir. Like contract is for like 4 years, sir.
Lease
But
contract is
each
4
year,
years.
yes, but
Okay.
each year we are utilizing the asset only for 3 months.
Okay.
And for the remaining period, the lessor can give the asset to some others.
So this
So in
question
that,
yes, I understood your question. This
yes,
question is there in the ICAI study material
yes, sir.
also. Yes. So in that case, the entire 4 year is not considered as a lease term. The lease term is only restricted to 3 months. Okay. Because
Yes.
in the next 9 months, the lessor is giving that asset to somebody else. Okay. So for those 9 months, the asset is not with this lessee. Okay. So in that case, and if I correctly remember, that question contains 7 years.
21
So,
months, sir.
sorry,
That is for
seven.
21 months, sir. 7
Ah,
into 3.
yes, 7 into 3. Yes, 7 years
Yes.
and every year 3 months. So the contract period is 21 months, not 7 years. Okay. So 3 months
Yes.
needs to be considered
Sir, in
as a
that
lease.
case, yes, sir. In that case, we will recognize ROU asset and lease liability for 21 months, no, sir.
Yes,
So,
equivalent to 21 months, equivalent to
yes,
21 months, but of course, you need to do the discount factor calculations accordingly. For example, in the first year, we are paying 3 months rental. Let's say the full rental is 1,20,000, but 3 months rental is 30,000. Just I'm taking an example. So we are paying 30,000 every year for 7 years, right? So I'll do the present value calculations accordingly, right? Yes.
means we have to discount it for 7 years or 21 months. I did not understood
We
that.
have to discount for 7 years, not 21
Okay.
months. Because just
Okay.
so let's understand with the help of the second example, let's say. So I will pay you, let's say I will pay you X amount, let's say 30,000 rupees every year, but I will pay you only to the equivalent of 3 months. So 30,000 is the equivalent to 3 months. Okay. So I will pay you in the first quarter of the first year, in the in the first quarter of the second year. So I will pay you 30,000 rupees in the first quarter every year for the next 7 years. Now you tell me the last payment which I have to make you for in the first quarter for the seventh year, what is the time value of money? The amount which you will get, while you will get the amount equivalent to 3 months only in the last year, but after what period you will get that amount? After 7 year or after 18 months?
7 years.
After 7 year, correct? So what is
Yes.
discounting? What is discount factor calculation? What is present value calculation? It's all about time value of money.
Yes, sir.
If I will ask you that Lavanya, please give me 5 lakh rupee after 7 years, right? So what you think of, okay, I have to pay to Mr. Alok Garg 5 lakh rupee after 7 years. How much amount should I deposit in State Bank of India today so that it will become 5 lakh rupee? You will do and you went to the State Bank and State Bank told you, madam, I will give you 7% rate of interest. So what you will do? You will make a calculation that 5 lakh, okay. Then you will do a calculation, just a minute. Then you will do a calculation, okay. Okay, I need to pay to Mr. Alok 5 lakh rupee after 7 years, and my rate of interest is 7%, which I can get from State Bank of India, right? So 7. It means if I'll deposit 3,11,400 rupees today in State Bank of India, after 7 years, I'll get 5 lakh rupees. Are you getting me? So
Yes, sir.
the timing is after 7 years, while the period is 21 months. Right?
Okay, sir. So we will depreciate the ROU asset also for 7 years only then.
You will depreciate the ROU asset also. Yes.
For 7 years.
Yes, because this 21 month is not a continuous period. This 21 month is among 7 years. Okay. And in depreciation method, if you appreciate the PP also talks about, PP talks about straight line method, WDV method, unit of production method, means usage method, right? And what is the meaning of depreciation? Depreciation is the systematic allocation of the depreciable asset over the useful life. Okay. So let's say if you will depreciate over 21 months, what you will do? You will depreciate in the first 2 year itself, but you are using the asset from year 3 to year 7 also, 3 months every year. Are you getting me?
Yes, sir.
So depreciation has to be charged accordingly. Okay.
Then what
So
is this 21 months have the relevance in this concept, sir? Then we are
only
not
for the
considering
purpose of doing
employee.
the discounting calculation and for taking this 21-month rental for discounting factor calculations.
Okay, sir.
Otherwise, you would have taken, for example, 10,000 is the monthly rental. You would have taken this 10,000 multiplied by 12 multiplied by 7. Right? But
Yes,
here,
sir.
you for ROU calculation, you need to consider 10,000 multiplied by 3 multiplied by 7. 21
7.
months rental. Okay.
Okay, sir. Thank you, sir.
Thank you so much. Bye-bye. Take care. Stay safe. Stay happy. Take care.
Thank you, sir.
Thank you, sir.